Another question that arises is legislation needed to make public banks legal? I've so far been talking about the Constitution, and that the Constitution does not make public banks illegal. But what about under state legislation? And we asked for, and a state legislator requested an opinion from legislative legal arm, and they came back and said, as long as the bank, the public bank, operates within its borders, in other words, it's strictly local, it would not require state legislation. That's our position, that a public bank would not require state legislation. However, we have some rules in Colorado legislation governing banks. And if we're going to form a bank, that existing legislation would appear to apply to a new bank. And so we have to deal with those provisions. One of them is you've got to have 102% collateral. In some states, it's a different figure for your deposits that are not already insured, for example, by the FDIC. We think that's a non-starter. We think it's a bad idea. We think it's a poison pill. And there are several reasons for that. One is the reason for that collateral provision is to protect government from private banks who have the goal of maximizing their own profit. They tend to lend outside the city in risky enterprises. They're handling someone else's money. That's not true of a public bank. It makes no sense to have a collateral requirement. It's like the government doesn't trust its own bank, even though its whole purpose by statute is to serve the city and its needs and its economy. Lend locally, it gets the income. It doesn't have any incentive to take risks at public expense. Obviously, the collateral rule would also be very harmful economically. It's very costly, requires liquid assets. Arguably, you could, under the current statute, the banking board could define collateral. The current statute says they can describe it, but they'd have to do it separately for the public bank. We think it makes much more sense to have the statute do what North Dakota did. They don't have this collateral rule. They say we back the deposits of the bank with the full faith and credit of the state. Another reason why collateral rule makes no sense is that it's really designed around the problem of recession. When there's a recession, if you've got many depositors, they're worried that the bank may go under and they will want to withdraw their deposits. Well, exactly the opposite incentive exists with a public bank. The last thing you want to do is withdraw your deposits. You want to keep those deposits in and working for the economy. And that's what North Dakota did in 2008. They didn't take their deposits out. They actually increased lending. They increased their lending, and they did it in partnership with the community banks that they make loans in partnership with, also credit unions. And the result was no recession in North Dakota. Those facts demonstrate why you absolutely do not want that collateral rule. Now, for home rule cities, we think banks are already legal. And I mentioned that you still might want to change the state law to make it more suitable for public banks. Another provision you'd need to make clear is that a public bank is a public depository and can take funds of the public. You'd make that a matter of law and not have to meet the provisions for that are required for private banks. I want to throw in an argument that is something to think about. This prohibition about making grants or loans, that sort of thing, that government can't do that. When it puts its money in private banks, it's giving away the power to create money, giving away the power to generate income. And it probably doesn't technically violate the Constitution, but I would argue that in principle it does. You're damaging your economy by putting your money in a private bank. And it's an argument I think we ought to at least make